All right, guys, welcome. This is Tightstops. I'm going live here on YouTube. Welcome to all the new folks. Welcome to all the people that have been here for a while. Tonight I'm going to talk about, getting a lot of questions about the three candles. We're going to talk about the three ones, the three twos. We're going to also talk about the magnitudes off of those candles. And I'm also going to talk about the 50% rule. And I think there's quite a bit of confusion on that. I just want to straighten that out for everybody. So let's get started, and I'll take some questions after each session, each part I talk about, and we'll go from there, guys. So, sound good? Let's go. So the first thing I'm going to do, I'm just going to pull up the SPY daily chart, and I'm going to briefly talk a little bit about broadening formations. I don't personally use them a lot, and especially on a lot of tickers. You know, SPY is one that you can use broadening formations quite a bit on, and they do seem to work pretty well on like a 5-minute or maybe a 15 or sometimes a 60-minute chart, where you can just kind of narrow it down to a shorter time frame. And I'll just show you some examples of what I use as targets and stuff instead of maybe a broadening formation. But one thing I like to do in a broadening formation, I like to have at least 3 points to the high and 3 points to the low. So I got 1, 2, 3, 4, 5, 6. I got about 7 points here on this broadening formation. I got about 1, 2, 3, 4, 5, about five points on that one. And as you can see, the broadening formation expand through this cream-colored line. So what I did is I found another one on the daily where we see just some price action going up here, down, up, down. That's a good broadening formation again. We got 1, 2, 3 points there. We got 1, 2, 3, 4 points here. And this tick came pretty close. And I drew this broadening formation off of this line and then this ticker here. And it did come pretty close. And what we'll do is I'm going to leave these up here for the future and the days to come. You know, if we still keep coming down, this obviously will expand. We'll see. But according to this broadening formation, we should, you know, if it holds true, we should come up and start testing this top of this broadening formation here, this yellow line. So I just wanted to touch on that briefly on the broadening formations, because I get a lot of questions about that too. Let's see, put my set back on here. Make sure you mute yourself, please. Please. Thank you. All right. So now let's talk about the 3 candle. And actually, I'm going to go to the intraday chart on the SPY. And I'm going to blow up the 30-minute. There's some good 3s on the 30 today. So the three candle is something, and if anybody's ever gone through Rob's class, and I've seen all his old videos from 5 years ago. I've seen his newest videos when he did a class about a year ago. And the 3-1 is something. It's called the 312. It's the Chicago. The area code of Chicago is 312, and it's one of the more powerful setups. And I know people have been using a different name, and it's a great term to come up with, and I really like the name too. But the 3-1 and the 3-2s are very powerful moves, and I just want to explain them a little bit better. So, as you can see here on this 30-minute chart today, the SPY went 3, and a 3 is an engulfing candle, folks, for people from the old TA world. So a 3 candle is just a number the strat uses, but it's not a new term. So the way you play the 3 is we didn't get a 1, we just immediately went to a 3-2 reversal. So we had the 3 entries at the bottom of the 3, and I'll draw that here. And then your target's going to be intraday targets when you're playing these. So there would have been a target, there would have been a target right there to the downside. It blew right through those. And then somebody had wanted me to find a target earlier on SPY. There was one there, and then my last one was the pre-market down there. So basically, the entry was the 3. Your magnitude is going to be the closest candle that isn't above, which is this 2 right here. That's your magnitude. That's your next magnitude. And then, guys, you know, this is something that they, you know, in the strat world that people agree on or disagree on. I love the pre-market because there's targets in there. I don't care what anybody says. We use them every day, and I mean it's pretty freaking accurate. So I look for where stuff starts sitting and consolidating, which is around here and here. Came pretty close, and then down here you get the consolidation, which is a target, which it came all the way down and did tick it down a little bit. So that's a 3 candle on intraday. Let's talk about a 3-1. Let's see here. Well, actually, here's another 3. Well, there's 2 3s. So the opening 30 minutes was a 3. Would have been a 3 up. It ended up going up for a 3-2 continuation. Because remember, this candle hasn't formed a 3 yet because it went 3-2 first. So could have entered on the 3, came up here, took a nice scalp maybe, and then your next, and then once, and then this is where the 50% rule is going to come in. Now this is where people get confused. The next candle has to come up above. It can't, so the next candle can't form down below this previous candle for the 50% rule. And this is straight from Sarah, so you can verify what I'm saying in her video. But this next candle has to come up, and it did. And then once it comes up and then comes back right here, 50% of this previous candle, that would be your entry for an outside bar, which it did. Now, if you wouldn't have played the rule, you could have played the 3-2 reversal, entered on the bottom of the 3. This candle would have maybe been a little tricky for you, depending on how tight your stops were. It might have got stopped out. But you enter here, and then you would have a 3-2 continuation to the downside for a nice little play on SPY off of the 30-minute chart. Let's find a 3-1. Let's see. I'll just go down to a 5 because there might be a lot more 3s on the 5. It doesn't matter what we look at. I'm just trying to show you magnitudes and entries. See if I can find a 3-1, guys. There's one right here. So entry to the up, entry to the down off the 3. You get a 3-1. Unfortunately, this one didn't work out because you're entered here. You could have caught a really quick scalp. That would have been your first target, the bottom of the 3, and it rejected that 3 and then came back through. And then you could have taken it to the upside above the 3 right here, and then that would have been a really, really nice play off of that fiber on that 3. So guys, magnitude is, when you play a 3-1, the magnitude is the bottom or the top of the 3, the first magnitude. And then you start finding your other candles. Same thing with the upside. Would have been here, 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 and here. And then if we go out a little farther, see if there's any more candles to get magnitude off of. Yep, here's a couple. And then you would have got the pre-market high. And so that thing just ripped through everything, which is pretty uncommon, especially for SPY to rip that much, but it did what it did. Let me see if there's any more candles in the pre-market. So once it broke through the pre-market high, your next target was the previous day's high, which would have been right here, which would have been on my chart that day automatically, which it didn't make it to. It's funny though, because today, oh no, that's just the red line from today, never mind, sorry. But for you guys that are scalpers off the fives, we'll go to a 15-minute, see if we can find some 15-3-1s. Let's see, is it 3-2, 3-2. See if there's any 3-1s from today on the 15s. Here we go. This is a good one. So there's our 3. We're playing the 15. There's our targets. We get a 3-1. There was no entry because it didn't go 3-2 continuation to the downside. It didn't do a 3-2 reversal, so there was actually no entry. That's the beauty of having a 1. Then we get another 1, which makes it a little even more powerful. But this is where it got a little screwy on this 3-1-15er though, because your entry's right here to the downside. And then your target is the bottom of that 3 candle. It went through the target a little bit and then came back reversed. But this is where, if you've ever been in Rob's room where he says, you know, you got to do battle with some trades. You just have to do battle and be patient. But the other thing you can do too is, another one of my rules is we're in lunchtime and we just don't even trade during lunchtime. And if you would have waited closer to lunch, 1 o'clock Eastern time, you would have finally got your entry when it broke below, because you got a 2-2 reversal, and then you got the big move right there. So that one took a while to play out. And then you'd have your 15-minute target, same thing, 3s, go to your 15, 15, 15, 15s. Expand a little bit here to our pre-market targets. And what else we got? Down here it's consolidating. Let's see how we ended up. So it ended up blowing through all 451. Ended up blowing through all that day too. And that's the day it blew through the monthly too, right there. So if you would have had your monthly up, you'd have known that too, and that would have been a target, which if you can see the candle hit it almost to the tick, and then the next candle broke through to give you confirmation that the trade was still good because it broke the month. Yeah, could make sure that if somebody can mute him for me, thanks. Let's see here. So let's go to a daily chart and look at 3 candles where you can get a little more power to them, I guess. But you can play 3s off of any time frame. 5, 15, 30s, 60s. So let's see here. So here's a 3 up here. There's a 3, the bottom. This actually started out as a 3-2 continuation. You would have taken the top of the 3. You would have made a nice move on that play off that daily. So that's what it opened up. Actually, wait. Yeah, wait. Sorry, it's late at night. I'm trying to think. So that probably gapped up there on that day a little bit. But anyway, you're above the 3. You can enter above the 3. It came up, came back down. But this is where you can stay on this 3 candle, because you finally did get a 3-2 reversal. The entry would have been, and you could have entered early here off the 2, the 3-2. This would have been a 2-2 continuation. And then your magnitude would have been the bottom of the 3. And then once you broke through the bottom of the 3, that's where the fun started to happen on that day. Your target would have been here, and it just went through that bottom of that target. Probably would have been a little bit of a money on that. 468, and then no, it just kind of ticked through it a little bit. So guys, that's just kind of a quick scenario synopsis on the 3. Let's look at a 50% scenario now. Let's see if we can find one here. That didn't come above, that didn't go above, that didn't go above, that didn't go above. Oh, here we got one right now actually today. So this previous candle, this 1, it took out the top of the 1, and then today, if it stays below 50%, according to the 50% rule, this should technically, in the scenario, go outside of this candle in this day, and it should close out below here. So we'll see. And right now, it looks like it's right at about 50%. But guys, and just go back and watch the video she did on her 50% rule. The candle has to go above and then come back down below 50%, and you can enter once it's below 50% of that previous candle. And we didn't quite get outside day today, but we'll see if we can get a continuation outside day tomorrow, where this candle in the next day will come, and it'll engulf, both these candles will engulf this 1. If it can stay below 50% of this 1 tomorrow. It should, in the rule, it should come and take out this 1, and then your target would be the bottom of this 2, 420.76. Any questions, guys, on the 3s or the 50% rule? If you don't understand, that's why I'm here.
Based on the strat method, say you would take the 2 up, and then if it fails, you get stopped out, and then you see it retract 50%, you can take it to the put side?
Off of this 2 here, tomorrow?
No, just like in general, because say you see, like, because before it's a 3, it has to be a 2, right?
Yeah, correct. I mean, it's gonna, this, and that's the thing, guys, if you've ever, in the, part of Rob's class, 2 days in a row can form a 3 candle, so that's where this might be getting a little confusing to you, but because 2 candles can create a 3. So technically tomorrow, if this stays below 50% of this 1, this should keep going down past this 1 candle. Our first target's going to be the bottom of the 1, and then we're hoping it goes outside this candle. Let's see. We were hoping it would do it today, and it just didn't. It didn't do it. You would have had a nice entry at the 50% of that 1 because it went up. You got 50% of the candle could have entered, then you would have had a nice run to the bottom. If you're playing off of that daily 50% rule candle. Let's see here. Like right here, there's this 2 over here. Your entry would have been 50% of this. And look, it ended up completing the 3 candle. It took 2 days to complete the outside candle, but it did it right here. It went up, and then boom, went outside of that candle. Here's another one right here, guys. Here's a 3-1. It went up above the 1. You got 50%, and then it went outside all the way through this 1. Let's keep looking. Already went over that one. Let's find another one.
Strategy with gaps when it comes to that.
You're really quiet. What'd you say?
What's your strategy with gaps when it comes to that move?
If something's gapped up a lot and I'm not already in it, I'm gonna let it settle down. I'm not gonna chase a gap to the upside. I more likely will look for a gap to take it the other way. Now, if we're in 2020 or 2021, early 2021, you can chase those gaps because the market was just straight bull. Not right now. Because I mean, if you were around in 2020 or 2020, early 2021, when stuff gapped up, they'd keep buying that shit in the morning. That's just not happening anymore right now at all. Let's see if we can find another one of them 50%ers here. So here you go. This broke below this 2, and then this one took 2-3 days to go outside of that 2. So you could have entered 50% of that 2 right there, which would have been a safer entry, would have been the top of the 2, but it worked. I mean, now we'd like it to be cleaner, where we're just getting one single candle, like right here. 50% on the 1 would have worked out beautifully. And that's where if you go back and look at the weekly, and see the weekly's not going to show that, but sometimes these plays can take some time to play out if you are trying to play that. Now this is more risky when you're trying to play a multi-day 50% rule, where it comes down and then this re-breaks above the 2. But once you get this 2-2 reversal, see, this is where you're above 50%, you're above the previous day's high, and then you would have got a nice run for a couple of days on the SPY right there. Actually,
in a market in a market like we're in, would it be advisable to do a daily entry and it can be considered a swing trade while it would take multiple days to reach your targets?
No, I mean, that's like if you're in my live or with me when I'm sometimes getting on in the afternoon. I'm rarely on in the afternoons anymore because I'm not swinging anything. Here's what I talked about the other day in the live with somebody, and I wanted to go over with you. Let's say let's say you got SPY early, and you bought 5 contracts, and you took off. You're in major profit on. You took off 3 of them here, and you got 2 left, and you left 2 more for even runners here, and you're really deep in profits. This goes back to small accounts managing money. What you can do is because you've hit this home, you've hit a home run here. You 3 of your contracts are in big time money, and the last 2 have just absolutely killed those. You're in major profit. What you can do now is sell all your cons, and then you can roll your contracts into. Let's say you were here, you bought the 437s, and you had 5 contracts go in the money. What you can do now is if you want to try to keep going with the trend, sell all 5 and roll them into Fridays. Let's see. I would have rolled them into Fridays 427s, 426s. But I wouldn't have bought 5 of them though. I might have bought 1 or 2 because you need to manage your risk. And that's why a lot of guys, and that's why I brought this up tonight, because I got a message from somebody that has a smaller account, and they bought a $320 contract at the close. I'm like, what are you doing, man? I mean, did you make any money on that today? No. And this is what I'm saying, guys. You can't blindly just buy shit at the end of the day with a small account. Not in this market. But if you are deep in the money, and you want to try to keep riding the trend, you could look at Fridays farther out of the money, find some cheaper cons. Let's see. Let's look at Fridays. Fridays. And you would have made a shit ton of money off those 5 contracts. You might have bought one of the 425s. Because if SPY ripped up $5 or $6 tonight, you might lose $80 on that contract, and you can just sell it. But you're already up probably $1,000 on the other contracts. But this is where people get in trouble. They'll hold all 5 of those cons that they had here all the way down, and then SPY will rip back up here. Let's say SPY opens up tomorrow at 437. I mean, you're fucked. You just lost all your money for the day because you held on to the same contracts and you didn't roll. And that's what you guys have to, and that's what a lot of new traders make mistake. They're like, man, I just made all that money. I'm going to hold all these, and I'm going to hold these until tomorrow. And yeah, you might roll them all, and it might keep going. But the key word is might. I mean, that's what I'm saying. It's managing your risk, and that's why it's safer to roll into some, some 425s. And buy 1 though. Does that make sense?
Sure it does. Thank you.
Yeah. So guys, if I had a small account and I didn't have a big banger in SPY at the end of the day, you don't just blindly buy with a $1,000 account, a $250 contract to swing overnight. It's just too risky right now. And what's the risk and reward? Just wake up tomorrow and wait for the right setups to safely play with the money you went to bed with. And yes, you are going to get lucky, and that's unfortunately, and you guys see all the shit on Twitter or how somebody swung something overnight and they made 500%. Yes, you are going to get lucky, but, that's the key word is lucky. Because we might wake up tomorrow morning and the guys, the billionaires might decide to buy this dip on SPY tomorrow morning and rip this up $5. We don't fucking know. Let's see, what else, guys? You want me to look at GILD? Yeah, I can look at GILD. Does anybody have any questions about threes? I want to make sure you guys understand what I'm talking about, because I don't want to just talk blindly. I'm here to help people learn. That's why I created this room, and I just want to make sure people are actually getting what I'm saying, actually getting the psychology, how to manage your money, why you shouldn't be swinging stuff with a small account unless you're up big time in that trade and you scale to a smaller contract. And see, that's the thing too, if you bought 5 contracts and you hit a home run, that doesn't mean you buy 5 cheaper contracts to hold those overnight. I mean, because we've seen some crazy shit happen in pre-market in the other direction. All right, guys, I'll start taking questions. I talked for 30 straight minutes, and I'm ready to see. Does everybody understand the three concept, how it works?
Tim, one of the things I saw going across the Discord today was people asking about the 1 bar rev strat, the 1-3s.
Mm-hmm. I mean,
maybe to address that.
Yeah, so to me, when a 3 comes, it negates the previous 1. I mean, that's how I play it, guys. That's just me. Because if you play a 1-3, okay, what if the next candle's a 1? We're in a 3-1 strat setup. So let's say the next candle's a 2. We got a 3, a green 3, or a red 3, and then we go green 3 up. It's just a 3-2. It's a 3-2 reversal. That previous one doesn't. I don't know who came up with the 1-3 strategy, but it's pretty much negated. You need the 3 is your new broadening formation. Justin, does that make sense? Am I explaining that correctly? I mean, to people.
It does. I like I said, I just didn't feel like typing it out. Because again, I was doing other typing. But no, I think it makes complete sense. And yeah, I mean the 1-3, I don't really think it's a thing.
I mean, I think a lot of people now are trying to add on to the strat, which is okay, I guess. But
yeah,
the reason this room and we're doing this room is to try to make things easier, not harder. And you start adding more reversals and more strat signals. Like, look at this right here, guys. Okay. Here's a 3-1-3. So we have a 1-3. Okay, great. What's my next play after this 3, guys? It didn't do shit. It went 2 up for about probably a millisecond, it looks like. So there's no 1-3 scenario in the strat world for me. Because this 3 negated this 1. We had a 3-2 reversal right here. A brief 3-2 reversal. And then the next day we got a 2-2 continuation off that 3. So my advice is on the 1-3 is I'd ignore the noise, but you guys can do what you want to do. There's no play. Because this is a new broadening formation right here. And we can go right here. We can go right here. We can go here. We can go right here. And I'll extend this to the right. And look at that. It's pretty interesting, isn't it, guys? Look at that. Just off that 1-3 bar, there's our new broadening formation. 1, 2, 3 touch points. And look at this. It's pretty damn close, guys. Pretty fucking cool, huh? Yeah, so ignore the 1 strategy, 1-3 strategy. Because here, guys, right here, you had a 3-1-2. would have been, so this would have went 3-1-2 to the downside. Yeah, it came up. Wait, what just? Yeah, 3-1-2 to the downside, then it came up through and then came back down. So just stick to your 3-1s, your 2-1s, your 2-2s, and ignore the 1-3, wherever that's coming from. If you don't mind. Because I can tell you in 7 months in Rob's room, we never talked about a 1-3.
Hey, can you possibly explain what Rob means by triangle day out?
Yeah, sure. Let me go to a daily chart. So triangle day out in the Rob world is basically a profit-taking time, right here. So this isn't a great triangle, but it's comes up. The profit takers came in, and then they triangled it out. They took it back up. Now, I'm not a TTO guy, guys. I'm a more of a reversal guy. I'm looking for reversals. This works for longer term trades if you're trying to hold something all day long, or for a couple hours, 3, 4, 5 hours. But this is one question I got a few nights ago. How do you know if it's a reversal or a TTO? That's a great question and he's kind of right, because you're not going to hear too many straters really explain it, because it's really hard to explain. And that's why I'm not a big TTO guy, unless we're in like a bull market. But we're more in a bearish market TTO kind of mentality, where it's going to come up here, TTO'd, and then here's the reversal. They TTO'd to the opposite way and took it to the downside. So this would be your entry for the opposite, the bear market TTO. You come in, take your entry, it comes up, then they TTO it to the upside, and then here it comes right back through. So they TTO'd through this triangle. This is the triangle. Let me try to draw this real quick. Where's my pencil? I can't ever remember where the damn pencil is. Pointer, pen. Oh, pen. Here we go. So here, boom. Why is my pen not working? I don't know. I've never really used a drawing tool on this thing as far as drawing it, but this is the triangle right here. And once you break through the bottom of the try, you've completely TTO'd everybody out.
I think it's worth it to mention, when you're talking about TTO, the objective, I've always looked at it this way, but the objective is to stop you out and then continue to move back down in this case.
Yeah, I mean, the TTO is to keep you in a trend, and it's something that when you're in a really good bull market, it'll work really well. Well, they're going to stop, find your stops here. So this, in the opposite direction, this is what they did. They went and looked for the stops up here, and then it consolidated, and then boom, they dropped the hammer.
All right, thanks.
Does that make? No, I really want to know. Does that make sense? Because this is
Yeah, it does.
Okay. Because I mean, this is one of the hardest things about the strat is the TTOs, because it's true. Do we know if it's a TTO or is it really reversal? And with a smaller account, you really can't sit through it to find out, to be honest with you. I'll give that answer for you. If you have a small account,
I might have missed it. What does TTO stand for?
Triangle day out. Here's the triangle right here. See, if I could draw this, I would draw a triangle right here.
I think as far as observations go on the TTOs that I've seen and been part of, typically you'll have like a fast move, in this case to the downside, and then you'll have a lot slower move up as they triangle you out.
Yeah, they're trying to find
so
stops.
Right. So I mean, and they're stop hunting. That's really what's happening here.
Yep.
So the downfall is if you got in, let's say at the top of that two candle, that red two candle, you set your stop loss at the top of that one, great, and then you set a trailing stop loss maybe, so then it moved to the next high on the way down. So you got stopped out there if that's where your stop was sitting. I mean, again, they're just stop hunting, but abrupt moves one direction and then slow moves in the other direction to try to stop everybody out.
And the other thing, a TTO, if you can buy commons, is going to be a safer. With options contracts, this is why I'm not a TTO guy. You're going to get fucking murdered waiting for a TTO. Because if this TTO doesn't come back up and just keeps going down, you're fucked. Now, if you're buying common stocks, just buying shares, you can sit through stuff like this. But here, imagine you bought this SPY short at 441.05. It goes down to 437, almost a $4 move. But then it comes all the way back and frickin' goes above your entry. You're like, what the fuck am I doing? So I'm not a fan of the TTOs. Now, if you have a six-figure account, a seven-figure account, you can sit through this shit because you can manage your positions and buy smaller size. But people that are learning right now and people with small accounts, I wouldn't be sitting through no TTOs. Now, if we're looking at something like Ford, and you got a small account and you buy one contract, let's see, today we would have had, I mean, this is a long-ass TTO. But with Ford, you buy one contract, they're $30. You take it short here, you're in the money a little bit. You come back up through your stop a little bit, through your entry, you're probably only down $8. And then there the big hammer comes. But it all comes down to what's your strategy. Am I trying to hit a home run on Ford on a $30 contract? And that's why I don't talk about TTOs, guys, because I'm trying to teach an approach where we're taking an entry, whether we're buying 1, 5, 10, or 50 contracts, and then we start taking our money off those contracts, and then we set a break-even stop on the remainders, and if it starts coming really back close to our break-even stop, we might consider taking all the rest off for a little bit more profit because we made a bunch on our first takeoff. And then instead of sitting through this TTO, and this is why I don't like the TTOs, this is my theory and why I never play it, why don't I just take my profit off and wait for another reversal? Does that make sense, guys? Because that makes a lot of sense to me and why I don't really play TTOs. Let's take our profits here on this short, and then let's wait for another entry off of a higher time frame, which is what we'll do later in the day. So let's take this 212 enter here, comes down, starts coming back in. Let's take our profits right here. Let's say we're just bearish on this stock because the market's we're just bearish for the month. We'll wait for a 3 or whatever this is, a 2 or a 3 or 1, whatever it is. Then we're entry at the bottom. There's our entry, and boom, we just hit a fucking home run. We took a little bit of profit early. We got patient. We waited the rest of the day, went to our 30-minute candles. We took a 30-minute entry off that, and we just hit a home run. Instead of buying 3 contracts here, sitting through it, theta burn, theta burn, theta burn, you're losing money plus theta, you're losing money plus theta, you're losing a lot of money plus theta. So now our profit, if we would have waited here for entry, we actually, make less profit because of theta burn as it keeps going down in options. And that's why the TTO to me is more of a thing that somebody would use when you're buying commons. Because you can sit through Ford, you can sit through a 50-cent move on Ford and commons. You can't sit through a 50-cent move on Ford when you're buying 5 contracts or 10, or like me, I'll buy 20 or 30 contracts. I can't sit through a 50-cent move on a options contract and hope it keeps coming back down. Justin, does that make sense?
Yeah.
Well, I figured I'd get some feedback from you for sure.
Oh, gotcha. Sorry, I was half listening, but yes, no, theta burn is bad. When I first started playing options, that's the one thing that I just could not wrap my head around, like why I was, like, let's say getting really close to being in the money, but for some reason my contract wasn't what it should be. And by should be, I mean, like, it wasn't even close to, where I bought it for, and I was further out of the money then, stuff like that. So, the Greeks, when it comes to options, they're really good things to understand.
Yep.
You can go to like Investopedia and just kind of the ones that are really important are going to be Delta and Theta. Those are the ones that I really keep an eye on.
Yeah,
there's other.
I posted a bunch of options videos in the options learning channel, so there's some good ones in there. There's a guy in there that I've watched a ton of his videos. He's really good at explaining all that too, if you don't want to read. But yeah, Investopedia is where you need to go if you want some information on anything that we're talking about, or more complicated scenarios. But if you missed it, Justin, what I was saying is you take your profits here and get out of all your contracts. You wait for the TTO, and then you find another reentry.
No, definitely.
Yeah, there's no reason to sit through this. Now,
in this case, I would have been looking for it to either pass reject the day's high or reject the week low. Trying to come back to the inside week, and that's exactly what it did. So,
one reason you might sit through a TTO is that, let's say it's Monday morning, and you're super bearish forward. Let's say this is Monday morning, you buy it really early, and the contracts don't expire until Friday, and because you got Friday, you bought let's say you bought the 19s, because a $2 move on Ford in 5 days is pretty, it can happen. You can sit through this little TTO if you're planning on holding that thing for a couple days. But just in this market, it's hard to even have that mentality. But I'm just giving another scenario.
Yeah, and then as far as observations go, folks, like even today, yesterday, this week, pretty much in general, what we see in the morning is kind of different than what we see in the afternoon. So, again, I don't really swing things. So I don't know, the mindset behind swinging things. Like I used to try that. I just hated getting up at 4 o'clock to see how futures were doing, and then why the hell was Ford not going when everything else was, and always just irritated me. So I don't swing things, but mentally, from a day trading, a scalping perspective, like you're looking for quick ins and outs. Get your 10%, get your 15, your 20%, whatever your risk tolerance is, and like Tim said earlier, roll that trade. Get the cash out with your money, go to bed with some extra dollar bills, and wake up, rinse, repeat, and before you know it, we see a lot of people posting small gains, and that's perfect. That's how you build wealth.
I finally put that video back on YouTube about the 7% compounding dailies.
Yeah.
It's a simple thing. It's just, if you can change, you have to find a system, and you have to find something you want to go to, guys. And that's just something that, consistently, I'm just trying to make a certain amount of profit every single day. And it just, over time, I can tell you in a few months' time, even with a small account, that shit can build up in a hurry.
Yeah, I mean, if you're sitting here trying to make 7% on $1 million account, that's going to be some chunk change. But you know, it's again, you start small, like, and keep it steady. You have $100. There are options that you can play. It's going to take you a little longer to get there, but you know, there are and Tim calls them out in the mornings. A lot of Tim's favorite tickers are, in fact, you know, the things that are under 30 cents, in fact. So
Yeah, I mean
it's definitely possible.
well, and the other reason I do talk a lot about the cheaper tickers in my life is because you know we got a lot of small accounts and I don't want to get because it's the same thing I said in the live a bunch of times. There's a reason I don't have Tesla on and Google and Amazon because what purpose am I serving to the majority of people that are in these discords? Because the majority of people in these discords do not have 50 grand, 100 grand, 500 grand in their account to play with. So,
Yep. The other thing you really don't see us talking about is lottos. You know, that's the easiest way to lose all your money.
Yep.
So, you know, we really try to focus on A-plus setups. Again, I scalp SPY. It's quick. If I see something coming, I'll usually plop it in the Discord, but it does happen very quick. So if you're not sitting there looking at a SPY chart, I wouldn't necessarily just follow what I'm doing. You know, whether you like, you know, think or swim, I think everybody's kind of seen Tim's setup here. I have a similar setup with multiple charts, and you can do the same thing. I'd recommend doing that so that you can at least, you know, keep an eye on the indexes themselves, along with some things that you really like to watch, and then you can see the move. We're also working on, and that's kind of what I've been busy on the last few days, but working on a bot that's going to tell us about like daily, weekly, monthly breakouts. So we got like a 2 up on the day or a 2 down on the day. You know, broke the previous day's high or low and stuff like that. So that's again going to help us out as far as giving us some direction on things to look at. So
Yeah, man. I mean, this is, and if you guys are new to the trading, it's a long journey. This isn't, and that's, you know, why we created this room. And you know, I trust me, I've been doing this a long time. I've been in multiple discords. I still watch discords every day because I just want to see the bullshit going on. You know, I'm never gonna show a picture of my cars. I'm not gonna show a picture of, you know, this is just not the kind of room. You know, we're gonna give you, you know, the real strategies and the, you know, the real world scenarios. And here's the thing, guys, you're gonna walk into a home run, but you can't go into every trade with that mentality though. It's not how it works. One of these days, the market's gonna get better. Trust me. And if you can learn right now in this kind of market environment, you're gonna be set. Especially you know, if you're new or struggling, if you can learn and really get down a system, you're going to be set.
yep. And if we help you get one of those fancy cars, I would like to see a picture of it.
Yeah, for sure. For sure. Thanks, Justin.
Yep.
All right, guys. I'll take some questions. And I'm not trying to reinvent any wheels here, guys. I'm just trying to maybe simplify things for struggling traders and new traders. Because I was there once too, and I was in the wrong rooms, and a lot of people are in the wrong rooms. It's really, really easy to make $5,000 with a 7-figure account, and you guys got to quit thinking you're going to make $5,000 with a $5,000 account. So.
I have a question on some of these stocks that are slower mover that don't have a very large average trading range. How do you stay patient in order to let the trade play out to your favor and not keep a tight stop? So tight.
So let's just pull up something like American Airlines, which isn't going to have much of a range. What's our average daily range in American Airlines? Let me see. I'll try to find something that's got like 50 or 60 cents here. American Airlines might have like $1. Oh no, it's pretty low. 80 cents. Yeah, that's a low range. So one thing on smaller stuff like this, you definitely want to avoid inside days. What does that mean? We do not want to play. So like today, if American Airlines was trading inside of this previous day where these two red lines are right here at the bottom and the top, just stay the hell away from them. Because where you're going to get on this stuff with the small ADRs is during when they break out and they're breaking out of a daily high or a weekly high or a monthly high. Those are where you're going to catch your big moves on these smaller ADR ranges. Now, to stay in a trade, you want to make sure, especially on these small ones, that they're in a trend above VWAP. And you guys need to go to YouTube, check out my VWAP strategy. I talked about this on the live the other night. I'm not going to get into it tonight. But as long as you're in a trend, like today, American Airlines just would have, it chopped you the hell out. And when you start seeing wicks like this, let's go down to 5, because we need to break it down a little farther here. So American Airlines, if you took this 2-2 continuation here, it went up. It's above VWAP. Inside, you got a 2-1-2, you're inside. That's the other beauty of these contracts is you can set wider stops. So like on this, if you entered here on American Airlines, you can set your stop at 16.58 and you entered at 16.67. It's only 10 cents. Now you might lose 3 cents on your contract, but or if you buy 5, you might lose $15. But that's the beauty of playing these smaller ADRs and trying to, especially if you're learning, guys. So you can sit and watch price action and really see, how stuff reacts to VWAP and stuff like that. And you can see how once it got above VWAP, it just came to the magnet. It took off of VWAP, and then once it finally broke below VWAP, there was a short entry. Then it gets above VWAP, there's a long entry. Now on something with American Airlines, you don't want to sit there and try to scalp it. You're not gonna. It's not worth it. You're trying to make a good run, and that's why you want to check the daily breaks off these small ones. Play those 2-2 continuations. Play the tops of the ones. Play the 2-2 reversals. Does that make sense? And if you guys are in my live room, there's certain things I'll look at, and I can see, because I'll call out an airlines one day or energy another day, hotels one day, both one day, and I call a lot of tech, but we're in such a bear market on tech that I'll start looking for tech later in the afternoon to short after it's kind of settled in. Because a lot of the tech's either going to be inside here lately, or it's going to be starting to get closer to coming to a 2 down on the daily. That's where you want to start looking for entries later. But there's a lot of tech you can buy that's cheaper, MUs, Intels. And also after today, these contracts should get cheaper too. This week, the contracts this week were insane. The FMOC anticipation, the volatility of the market before FOMC. And we should hopefully see some stuff settle down tomorrow. Because, even American Airlines is stupidly expensive. It settled down after the FM. But these were expensive to begin the week. Because you can usually get like 50 cents out of the money on airlines. You can usually get them for on a Monday for about $20, $30. All right, guys. Any questions on 3 bars, 50% money management, and welcome to all the new people. And also too in this room, if you are new, we're the kind of room we're going to try to help as many people as we can. we're getting even more. I keep saying that though, and each day that goes by, we just get crazier and crazier, but which is good. But more and more people, which is cool. Means I'm doing something right. And if you're not used to me yet, I'm pretty straight and to the point. I don't, not a lot of frills. I'm never gonna post any of my winnings. If you're in my lives, the ones that have been with me, I'm consistently green pretty much every single day. Because I have tight stops, and I don't hold losers. And I used to hold losers and used to lose a lot of money like everybody else. And if you're too shy to jump on the mic, you can type in your question.
One thing I wanted to add, I don't know if new people know this or not, but I don't know if this was covered as well. But with the VIX being so high, just be careful. Like when you guys try to, swing stuff, just know that when the VIX drops, your calls or option prices will drop as well. So just FYI on that.
Yep. Yeah. Correct. Thank you. Yep. And that's the other thing too. You can go through my other videos, but I've got 5 monitors. I got a big one that I sit in front of me that I use for my Discord. Above that, I've got all my futures. I got DIA, my VIX, my Qs, my SPY, and you have to be watching those while you're in trades too. And if you can, just join the live if you can. I mean, and I talk about all this stuff every morning. And one of these days, we will be live all day. I'm just still trying to find some couple trusted helpers I can find where I can take a break, because I can't sit here for 8 straight hours because I'll just go stir crazy. Because I've usually made all my money early within an hour and a half, and then I'll come back in the afternoon and I'll look for something to scalp off of maybe. Especially here lately, the afternoons have been awesome to trade.
Do you like playing continuations, or do you avoid those?
No, I love continuations. We play them almost every day. I mean, because here's the thing. Early this year, first week, couple weeks, they were buying energy and they're buying Ford heavy. That continued from December into January. We bought Ford 3 or 4 days in a row. We bought energy, I think, for almost a week straight. So yeah, definitely play continuations. All right. If I don't get any more questions, we'll end it, and I'll give you a few more seconds to see if there's any more questions. I guess I'm the best explainer ever because I don't get very many questions. I doubt that's true, but and you guys don't be shy in this room. Like, I don't let people talk bad about people in this room, and I don't talk bad about people.
No, appreciate you guys. This is very helpful. I'm new to this strat, and this is, eye-opening stuff. I'm still trying to learn how to draw broadening formations and things like that. But it's great. Appreciate you.
Yeah, man. Thank you, and I appreciate you too. And jump in the learning channel. And Sarah, and there's a video on Benziga from Strat Soldier for strat beginners. Watch those 2 or 3 times if you have to get kind of the basics of the strat, get your reversals down before you start getting into the broadening formations. And honestly, guys, I would leave broadening formations until the least valuable amount of information you really need. Kind of save that for last. You need to know magnitude. You need to know how the candles work. You need to know your reversals. You have to know magnitude. You have to know where the price is going. But overall, on anything with any other strategy, it all comes down to how you manage your money.
Hey, Tim, I have one more question.
Of course.
As far as like, I was with you, I think on Monday in your morning room. I couldn't play today, but we're playing Bank of America. And are you hitting the just the market buy, or are you actually on the continuations, or are you actually just putting your buy limit on the ladder?
Yeah, that's why I stick to stuff with really tight spreads. I'm marketing in on breaks because I'm not going to get left behind.
Gotcha.
Yep. And that's why it's harder to play. That's why in my room you won't see me talking. Like, a lot of things. Somebody will say, hey, look at DraftKings. That's not a good example, but because the spreads are tight, and I'll go look at it, and I'm like, oh no, those are 15 cents, 20 cents apart. And if you're going to play stuff with wider spreads, you have to limit in those, but you also have to kind of wait for a little bit of a pullback to play limit ins because you're going to get left behind. Because here's what happens with limits, guys. If you play a break and you set your order at a limit, and let's say it goes up 50 cents, and then it retraces back and it comes back to your limit, it's going to fill your limit order, and a lot of times it'll keep going down. And you hear me talk about that a lot in my live. We avoid the shit out of spready stocks. And this week has been pretty shitty for spreads. And like I said, this should tighten up. Even SPY's, usually SPY's a 1 cent spread no matter what. Not here lately. What else? But that's the other thing too, guys. Like, I do play Tesla. I play all the biggest stuff. But I don't talk about it in the live because it's not going to help you make money. Because you're just going to chase into Tesla with a small account and you're going to get murdered. And the other thing is also too, like if I'm playing these smaller ones with you guys and stuff, I'm buying 40, 50 contracts. And as you keep building your account up, and that's the beauty of playing these smaller tight spreads, as you keep building your account up, you can keep building up how much you can buy per order. I'm surprised nobody's talked about, because that's another thing in the strat world. People talk about they buy small at the beginning and then they scale in. I don't do that. I buy multiple contracts at the open or at the break, and then I scale out. Because most of the time, if you try to scale into a play in this kind of market, you're basically just going to buy those small contracts at the beginning, and then the play will never come back. You can't even scale in it. You just have to sell the one contract you bought. And for small accounts, you shouldn't be buying a bunch of contracts anyway. And that's a video you need to check out on YouTube. I talked about that, the 7% challenge every day. You can break it down to 4 trades of $250. You got 4 bullets that day. You take that break, you set a really tight stop so you don't lose a ton of money, and then you got 3 more bullets left. If you have 3 losing trades with super tight stops, and that one trade goes 20 or 30%, you're going to have a good day. Risk management, money management. And that's another reason I have this room too, because that's something that doesn't get talked about nearly enough. All right, I'm not seeing any more questions. Well, I love you all. Thanks for jumping in.
Thanks a lot.
You're welcome. I'll see you all tomorrow.
Have a good night.
You too. Thank you.
Thank you. Have a good night.
You too.